Hello guys, it's Caroline again, and this morning you can see today it's February 28th, and we just have the first hour of trade in the London Open. And as you can see, the first hour candle tried to go up but couldn't break above, and the sellers came back into the market. So why is this happening? Please, whenever you decide to look at this chart, always look to the left. It's a golden rule. It will help you a lot. You can see see there was resistance up here, and this day February 20th there was resistance here. February 17th, you could see there was resistance here, tested and came back. In Asian session tested it and came back, and the European session again tested it and came back. So if you look at what was happening here, moved yesterday onto this level. So see it's happening. When if there is a buy trade go long, please, you don't want to take it like that. So this is the high time of these three time frames that we're looking at. The 1 hour chart. I begin with 1 hour chart. Looking at this chart was for a breakdown of the chart because that resistance level. We would have moved to the 15 minutes chart. If you look at the 15 minutes chart, you could see what's happening here. A price during the Asian session just stayed above there, and you can see the first hour. This is what happened. It came down. The first 15 minutes tried to go up. This is what you saw in the 1 hour chart, but couldn't. By the last 15 minutes of the first hour, you saw the price was already breaking down. So I see that was happening at the first hour of trade. You would have gone to your 5 minutes chart. So at the 5 minutes chart, so what happened here? That was the first 5 minutes was above, but because the 51 hour was past the level, you were not going to take the trade. It's very good to look at the higher time frames before you take your trades. So what would have happened, because you're looking right now for price to be rejected at that once this happened, you saw price broke down here on the 15 minutes chart, close below the two moving averages. You jump down to your 5 minutes chart. You'll see what is happening here. At this point in the 5 minutes chart, because of what happened there, that's where we would have gone short. We got short here at 1.0776 at the close of this candle. Expand that a little bit. Yeah, at the close of this candle here, you would have gone short. After looking at the 1 hour 15 minutes, at this point you would have gone short, and place your stop loss just above the high here, the high above here. Stop loss would have come here, just a few pips above the high at 1789. You take a trade at 1.0776. That was about 20 pips, but you're targeting 20 pips, so your target would have been 1.0768. Your target would have been 5.8, about here. That's your target for the day. So you can see price is still moving. It's still doing what it does best. So just watch and see what happens. At this point in time, you can actually move your stop loss from there to break even. Yep, to break even. Hey, if it comes and takes you out at that point, no problem, you just have a break even. Preservation of your capital is very important. So just watch the trade for a few minutes and see what happens. Yeah. Okay, after a few minutes I'm back. We're almost getting to 11 o'clock, and you can see our stop loss is still in place at break even, and the target, we've not reached the target. Just came back here, and the truth is, if I was here at the close of that candle, I would have closed the trade and just wait. But if you go to the 15 minutes chart, you can see that price is still trading below that moving average. If you go to the 1 hour, you can see actually waiting for this price to break down those below that moving average. If that should be able, that should happen. You know, sometimes I look stochastics, which is here. It helps me to gauge. You know, sometimes you think stochastics help, but look at what happened here, down, and then just went up. So it's equally happen here, but because of resistance here, you actually can't break. So it can go back down here. At this point, if I feel there is a lot of sideways movement right now, and to feel comfortable holding the trade at this point, you can close and take your 10 pips or 20 pips from this trade and just wait. I like to sometimes check the sort of what is happening there, so you might want to just close trade and then re-enter because of what is happening. This kind of, if it closes below that moving average, and 15 minutes also still below those moving averages, and you can go back to the 5 minutes. See that there's a support line that has something there. So if you're not comfortable thinking, okay, am I going to take you to a, hey, you can catch your 10 pips in that scalping. Some people look for just 5 pips a day. 10 is something halfway to your daily goal of 20 pips. Then you can be out of the market and just wait. And if it's break through that support line, you can decide to go short again, so long as price stays below the moving average on the 15th and below the moving average on the 1 chart. But on the this right at this point, I would wait for a pullback. Sometimes if you use Fibonacci, you can then come back. Usually it's about 50% or 61%. So it might pull back right to 107.19 or 107.03 and there's a good retracement. You can see that the new 1 hour candle has just opened at level. It's pretty under the, so this actually closed below that moving average. This kind of actually below that moving average, so you can hold on to the trade. Or like I said, if you're comfortable that is trade above here, you can close and wait for a break below this support line that has formed there, and then there you go, the day, at least 10 pips into your pocket as you relax. And so I hope this helps you out again, and to email any questions you may have, and you stay blessed and have a nice day. Bye. What?